Peter Eliades with you, Stock Market Cycles update for the week ending Friday, the 13th of March, being recorded Saturday. The time now is 2:11 as we're recording this, 2:11 p.m. That's Saturday Pacific time, 5:11 p.m. Eastern time. So we have some projections to show you. We don't want to start with this one. We'd like to start with this one. Now, this is on a weekly chart. So we've been showing you the projections on a daily chart. They match very closely up. In other words, a nominal 78 to 80 week projection on a weekly chart should match up to the offset of 189 to 194 days, trading days on a daily chart. And so this is the projection that's been generated on the weekly chart, calling for a projection between 2145.62 and 2372.51. Interestingly enough, last Thursday in Globex in the nighttime session on the S&P futures, there was a low that was registered down to 2380, I believe. That came very, very close to this downside projection. But of course, that was futures, and this projection is for the cash. So we can't be cheating at least a little bit if we said that the futures met that projection. So this is the nominal 78 to 80 week projection. We have not met even the upper side of that, which is 2372.51. And the lower side of it is significantly lower at 2145.62. So do we still have lower projections? Yes, we do. Now let's take a look at potentially even lower projections than that. These are nominal 4-year projections. The offsets that are used are 100 to 110 weeks. The red one is 100. The blue one is a 110-week offset. So as you can see, a preliminary projection down to 2258 and change has been generated. But if we get fully below both of these lines next week, we can get even lower projections. And in fact, I'm going to show you the daily chart of this offset, which is going to say that nominal 4-year projections have been confirmed to the downside. They've begun to be called into question with the strength that we saw at the end of the day on Friday, but they were not fully called into question. Okay, now here's where a little bit of the contradictions come in. I've showed you these charts with the S&P. If you look at the New York Composite Index, all the downside projections have been met, suggesting that there should be some kind of turn here. Now, the only possibility, and it's a real possibility, is that there are longer nominal offsets that would give even lower projections for the New York. I've done research on that over the years because certainly 4 years is not the longest nominal cycle. It's not the longest nominal cycle that we're aware of. So there are cycles longer than that in the market. It's just that I've never been able to come up with a consistent offset to measure some of the longer term cycles. And with this new software, that's perhaps something that I'm going to want to look into and research. So I just wanted to give you that background that the New York Composite Index has met all downside projections. The S&P 500 has not. Let's take a look at the daily projection charts in the S&P. Now, we've been looking at the closes. Let's take a look this time at the bar projections. This is on the 189 to 194 day offsets. So, as you'll note, the weekly projection, the equivalent of this, was 2146 rounded off to 2373. This one is pretty close to that, 2157 to 2319. So this one allows for a lower upside. In other words, this one says you come down to at least 2319. The weekly one said you come down to at least 2372 and a half. So, but this is the daily projection, and as you can see, it's been very much confirmed. You can see even with a big rally on Friday, this day right here, you need to get up well above this territory around 28, almost 2,900 in order to invalidate this downside projection. So it's very much in effect. Now, the other projection I want to show you is the longest one of all on a practical basis, and that's a nominal 4-year projection. So these offsets for the nominal 4-year projection end up being very long offsets. I think it's 484 is the green one, and I believe the dark blue one is 532 trading days. That's the half span of the 4-year downside projection, or of the 4-year nominal cycle. So take a look at these projections and look at the low end of this one. Oh my goodness. This nominal 4-year cycle is telling you that there's a projection as low as 1777 and change on the S&P. Now again, on the weekly, these are daily projections right here. So let's zoom in on this and take a quick look at it. This way, we'll take this look right here. Okay, this is Friday's action right here. And here's the mid-bar on Friday. Let's get rid of the numbers here. This is the mid-bar on Friday. It's still below both of these offset lines. So as far as the projections are concerned on the daily chart, these downside projections remain in effect. 1777.84 to 2328.58. Now, if there's any follow through to the upside with Friday's rally, we can very quickly get above these offset lines, both of them, and that would invalidate that downside projection, at least temporarily. So that's basically where we stand. Let's take a quick look at the intraday charts, because that might give us a clue as to what's going on for late Friday moving into Monday of next week for daytime trading. We can do that with our 27-minute offsets, and this is on the S&P. And notice that when the rally started late in the day, this little green patch here, we met that projection. Now you look at the next longer one, and that one got given and invalidated and given and invalidated. But there's a little green patch right here, and you can see that that was met also late Friday with that rally. And the next longer offset, here's the rectangle right here. That was met on Friday and surpassed. And so we go to the next longer one. And here's the next longer one, and this one is interesting. So it's telling you you have a preliminary up to 2641. Well, we reached that. Now we have to wait and see what happens on Monday with the next bar in this projection picture. If the next bar is up here somewhere, then this offset, again, let me show you. Let's look at this more closely. Okay, so here's the last bar on Friday. Now, if we go sideways on Monday, this median price on these bars is going to cross much higher above this offset. So although the lower part will remain right around here, the higher part of the projection rectangle could be significantly higher. So that's something we'll be watching for on Monday. If it gets really interesting, we might do an intraday update, but don't count on that. So that's where we stand. I could take some time and go over some of the technical readings for you. Obviously, some of the oscillators, McClellan oscillator and advanced decline oscillators, relative strength indexes, those things are historically oversold. That doesn't mean you're at a bottom, though. So these are things we're going to have to watch very closely over the next several days. I hate to be contradictory like this because I know some of our cute little comments are going to say, so you're telling us we're either going to go up or go down, right, Peter? I hate when people do that. I don't think I've been saying that to you over the past several months, but I guess we'll let people read into it what they may. Next week's going to be an important week, and needless to say, this is an unprecedented market decline. And I don't say that off the top of my head. It's unprecedented in the kind of decline we have seen off an all-time high in the market. We were down 26.7% at the closing daily low last week, and that's almost twice the amount that the market's ever been down within the same amount of trading days from a new all-time high. So that's how dramatic this decline has been. And it's something that is going to bear very close watching over the next several days. We'll be here to do that with you with our cycle analysis. I hope you enjoyed this one. Have yourselves a great remainder of the weekend. Please give us some comments, hopefully favorable ones. If you have something negative to say, tell us why. And please give us a thumbs up, and let's work from there. Thanks a lot for watching. We'll talk to you next week.